Hey, everybody. I may be a little different than the average person you hear talking to you. Some of the topics that I have, I think, are maybe different because I've been not only trading and investing for a long, long time, but I've also been teaching to other people for a long time. And I kind of know from my own experience or from working with a lot of people what really ends up mattering much of the time for people to end up being successful. So let me get going here. Let me go to the first slide here. And the first thing I want to do is get something out of the way. I want to introduce myself a little bit and also get something out of the way. I'm supposed to have some special offer for you or whatever. I don't have that. I don't do that. That's not really what I'm about. First of all, in terms of any kind of incentive for you to jump into some kind of seminar program, I actually kind of almost discourage people from doing that initially until you're ready, really ready for it. So I don't believe in trying to encourage somebody to do that. DTS, Disciplined Trading Strategies, is my site. It's my company. And I don't have any sales, and I'm a little different. I'm really out here right now with a commitment to help people really learn and understand technical analysis so that you can make money in the market, whether it's day trading or whether longer term investing. Same thing, same concepts. If it's not right for you right now, then I also offer services that can help you make money directly. In other words, getting fish instead of learning how to fish, the old adage. Learning is not hard, but it takes some commitment. But anyone who wants to can learn, and the less experience that you have going into it, actually, the better. So don't think that you don't have a lot of experience, it's hard to learn it. But don't begin this endeavor if you're not ready, and do not be talked in by a sale. Don't start just because you want to quit a job. Ease into it, whether it's long term or short term, same thing. If you want to, take a moment and go to my website and read the bottom of the page there where it says warning. Here's my website, so you can click right on it, and then you don't have to worry about typing it. It's disciplinedtradingstrategies.com. Down at the bottom, there's a warning, and I talk about seminars a little bit, so you can see I'm not blowing any smoke here. It's just what I believe the right way to go about learning this if you want to learn this eventually someday. Services are a little bit different. If you want to participate in a trading room or in one of the two letters I write, that's just a 1 month commitment. You don't like it, you back out of it, whatever it is, that's fine. I encourage people to stick their toes in the water and start learning what it is you want to do in the market, whether it's long term or short term or a combination of both. If you're not making money, you can always quit. There's no harm done. What worries me, what bothers me always, is that there is a tendency for people to try and jump in too quick. I've seen people blow out entire accounts. I've seen people think they can learn how to do this after taking one video lesson, one weekend seminar, whatever it is. And it's not that you're not smart. I have no question you're among the smartest people if you have the money to be here contemplating how to manage your own money or how to day trade. The problem is that learning to trade is very unique. It doesn't involve the other concepts that you use in other parts of your life. You could be the most successful business owner, salesperson, whatever it was, and it doesn't transfer to making money in the market. Some of you realize that already, I imagine. I have both long-term and day trading, Don. I'm going to talk about it. I don't like the term swing trading. I think it's a very difficult time frame. It's something I'll talk about in just a little bit. And what I do offer for a lot of people is just a huge wealth of information and what I call free stuff. There's a site, one of the pages on my site is just a wealth of information you can go to, and I encourage you to do it and go there and take advantage of it all that you can. You'll see it if you're on the home page, but here's the direct link to it. There are videos from past events like this. There are Trade of the Week videos. There's educational videos, all kinds of great stuff, not only just for very beginning traders, but for people who've been around for quite a while. I teach a little bit differently. A lot of the stuff I have to say people almost are shocked at, but you should be, because the majority of people who come to the market, what do? They lose, the majority. What do they have in common? Well, they're all kind of taught and learn the same process, and that process gets you just good enough to lose money, if you can relate to that. And it's something that you have to kind of break through to the other side and get beyond that. Free stuff on the site, blah, blah, blah. You can go there, click around, and you'll see a lot of information there. And you can go to the free stuff right now. You don't need to be part of DTS. You don't need to pay. You don't need to be a member, nothing else. However, if you do want to do one thing with me today, that would be a member at DTS. It doesn't cost you anything. It does. You don't need a credit card. You don't even need a real name. You can make up an email. Just make sure you have access to the email. And what you will get is educational lessons from time to time. You'll get invited to other events that I do. I happen to be a guest here with Anka today. Thank you again, Anka. But I will also at my own site at DTS, I typically do an event every 2 to 3 weeks or so that you will be invited to automatically if you're a member. You get a little weekly thing at the end of the week. It's no big deal. It's a little weekly summary, and you get other educational invites. Thanks, Inka. So that's all I have for you is just get to know me a little bit. Let me talk about myself just a little bit real quickly, and then I'll get into what we have to do today. I don't want to bore you, but the information that you hear from somebody is really only as good as your faith in the person that you're listening to, right? I want you to get comfortable with me, and where I come from is I was for a long time with a company called Pristine. So maybe some of you know me from way back then if you don't know me from my own company. About 18 months ago, I started my own company called Discipline Trading Strategies. I wish I would have done it a long time ago. It was great being with Pristine for a long time. They were at one time a really huge company, and then of course as this industry got fragmented, they eventually got sold off, and I went off on my own. And I wish I did it a long time ago because there's just so many things that I am able to do now because I'm a little different. I actually was just going to kind of retire a couple of years ago, and I kind of got sucked back into doing this because I really enjoy teaching people and working with people on this. But there's so many things that I can do differently in my own company that I couldn't somewhere else. And there's just a big difference. And right now, I really have a pure emotional, personal commitment to trying to get as many people to understand and be successful making money at this as I can. And that's not the goal when you're with a big company. The goal when you're with a big company is, how can people buy more stuff? That's always the goal. Thanks, Mike. And let me just reiterate. And again, there's nothing wrong with this. I mean, it's what business is. But I just want you to understand, DTS is just me. I mean, if I have somebody help me with some paperwork, it's still me. Everything that happens is me, and it's different than before. I've been there at the meetings in the bigger companies, and the goal always is when somebody buys a seminar. What is the goal? I like you guys to participate if you want to. What is the goal in a big company? When somebody buys a seminar, what is their goal? And I'm just being honest. And you guys know this. What is their main goal? Because I want you to understand this before I get into today's material. Do you know where I'm coming from? Yeah, right, Lou. Exactly. Exactly. It's what will they buy next? There's a term, I forgot what the term for it is. Anka could tell me what it is. But there's a term for it where, the idea is to get somebody in and get them in, with a reasonably priced item, and then to upsell it, and to keep, you always have to sell the next thing. It's the low-hanging fruit. In other words, your current customers are always your best customers. I can prove to you I don't believe in that. If you do take a seminar package with me, my total package is a fraction of what it costs for most people at one. It's only $29.97, and there is nothing else you can even buy. I just want to make that point. There is nothing else. I mean, if you came to me and said, Paul, I love you, I want to buy everything you have, there is nothing. You get unlimited coaching with me. I just have the commitment to want you to get you to learn this. So I just want to get that out there, that this is not about a sales thing to me. I bet you there's people in this room listening to me that I've talked out of taking a seminar because I didn't feel they were ready yet. You need to be ready to commit the time. I feel it's a good 3-month investment in time to really learn, and anything short of that, you're just kidding yourself. The problem, technical analysis is the only way to do this, and it works incredibly well. The problem is most people never learn it properly. They just don't learn it properly. And I'm going to get to that. It's one of the topics today we're going to get to. Let me take a quick look. I actually normally I just wing these things because I'm pretty good just talking, but I made some notes because I had so many things I wanted to say today. So let me just make sure I don't. I am a trader. Again, me personally, I like to day trade and I like to long-term trade. I don't like swing trading. I actually think, now again, these are just terms we throw around. By swing trading, though, typically is defined as holding things 2 to 3 days. I think it's an extremely awkward time frame. Again, if you go to my free stuff page, there is a video on there called Beware of These Two Time Frames. You'll find it on there. And if you've been, a lot of people get forced into swing trading because they don't have the $25,000 to day trade, right? And somebody told you, oh, well, practice swing trading. Swing trading is difficult. It's so hard, I don't do it. It's a very awkward time frame. It's a tough reward to risk. You get shaken out of stuff the morning of the next day. It's very, very tough, okay? Not sure about TMA after taking Pristine and John Carter stuff. Sticking to cover calls. Cover calls is great. Cover calls is great, Lou. That's a great thing to do with options. But, options is not a strategy. Options is a derivative. of stocks or whatever you're doing the plays on. And in order to do that properly, you need to understand where the underlying stock is going. And I certainly understand anybody's reservations. I mean, it's the biggest thing I get is, God, I paid for stuff once. I don't really want to do it again. I get that. I can't help that. I mean, there's a lot of people out there. I've heard people teaching that, to be honest with you, don't have a clue what they're doing. I mean, they have a clue, but they're just teaching the 101 stuff. I can tell that they're not making money because I know by what they're saying. When you talk about buying something on support, I'm going to get to some of these. You're getting me way ahead. But when you talk about like buying something on support, that's a bit of a fallacy in a sense. You have to understand how the market operates. Yeah, theoretically, yeah, there are support areas out there. I love support and resistance, but so many times people misunderstand it. I actually, to go long, I'd like something to break support and then prove that it's not going lower. That's your best entry. Most people don't even understand that concept. They think when it breaks support, it's time to go short. And it depends on the overall bigger concept, what's going on. I'm way ahead of myself, but I'm just saying there's so many things out there that are not taught in enough detail for you to make money. You just get enough information to lose. Right? Everybody? Isn't that true? Those of you that spent money on classes, normally you get just enough money to lose, right? Now, don't get me wrong. I understand people want to learn on their own. That's why I have this site with all this free stuff available. Ta-da. I wanted to learn on my own. I remember 20 years ago, I tried to learn on my own. Why? Because I'm a really smart guy. You know what? Best thing I ever did after 4 months was admit that I didn't know what I was doing. Now, let me tell you, when I got my first education, by the way, I have no history in the market before I started this. I was not on Wall Street or anything else like our last guest was. I had no understanding at all of stocks before I started learning it. And I'm not going to kid you, when I took my first seminar, it was the beginning of my process. I didn't, it wasn't like, wow, ta-da, all the lights come on, you're just a genius. That's not the way it works. But it's also not that difficult to learn if you understand and if it's taught to you properly. Okay? See, Lou, boy, I almost want to stop and talk to you about that because that is, please forgive me. Lou, you may get mad and walk out on me, but I mean, you cannot say that. That's a loser comment. If something happens to you every single day, it's part of the game, Lou. We have to adjust. And you know what? The HFT excuse has been gone for years. It's part of what we do. See, you need to understand that that will happen, and that is my entry on trades. They're called little shakeout entries. That's what I used to get in. I don't get in on things that are way past normal entries. I get in on those shakeouts caused by HFTs, or most of them, Lou, aren't even caused by HFTs, to be honest with you, anymore. Years ago, they were. HFTs, they still do the majority of the trading, but they're not causing these instances. You know what causes the instances, Lou? A bunch of traders who all think this is the stop. They put their stop there, it hits, bam, 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 it runs, and then the real buying comes in, and you're sitting there in the dust. This is what I'm talking about, though, Lou. You have to get a step beyond that. You can't just sit there and go, oh, my stop hit, I lost again, trading sucks, HFT suck, everything sucks. You have to get beyond that because it's part of the game. Isn't that true, everybody? No, yeah, but Lou, if they do it to you every day, you can fill in the blank, right? If it always happens to you, that's what technical analysis is in a sense, is understanding what happens all the time and adjusting to it. Not doing what somebody told you you're supposed to do, but doing what you read on the charts. And it's what I talk about. Notice this thing right here where it says, the language of charts. That's what I call what I teach. It's not about cookie cutter patterns. It's not about, oh, the prior support was 22.25, so I'm going to go long at 22.25. None of that works. It's understanding the language of charts, which I'm going to get to. So let me keep going here, or I'm going to be still on slide 6 when my time runs out. I love talking to you guys, but I do have to get through some of the stuff. So let me go on. You guys, hopefully you know me well enough. I'm 100% technical. You'll know that by the end of today. I day trade and I long-term trade. I'm not a fan of the swing trading time frame. And also, I don't want to step on any toes at all. I don't want to step on any toes, but I also have to speak freely and speak my mind. To me, reading charts is all there is to it. And I have to apologize. I wasn't really at all listening to Christian. I was kind of polishing up my notes and stuff. I did listen to Anka a little bit. Anka is great, and I love trading futures too with Anka. But I do want to mention one thing that I think is a fair comment to say. I love equities because of the variety that you have. See, with equities, there's a couple thousand stocks that you could be looking at or even more as swing trades. And even as a day trader, even if you're trading, excuse me, pretty good share size, you'd be looking at between 300 and 1,000 stocks. And that is variety. See, futures has all those wonderful things, and I do futures. But I feel that I am more patient than 95% of the people out there. It's something I've learned to do. It's not something that's inherent to me. But I am not patient enough to only trade futures. Why? Because there's one setup. There's one thing you're looking at. I don't care if you're trading the NQ or the ES or whatever. There's basically one thing you're looking at. You don't have a concept of relative strength or weakness, and if you miss it, you're kind of done. And then you're either forced to make a trade or you have to wait a long time. See, with equities, what I love is every day there's different stuff. And I'm going to show you in a minute. Well, actually, yesterday, I didn't have time to put yesterday on here. Yesterday was a really nice day. I was short most of the trades yesterday on a bullish day. I missed one of the best long ones. I had one long and 4 shorts, and it was a great day. I made 3 times my goal yesterday. And I was short on the most bullish day in the country, in America, because it's just unique stuff that you look for sometimes. And that's what you have with equity. So that's something I'm big on too, is I do like equities, and I throw in the futures trades when they're just, wow, what a great setup. Just got to do that. But I can't wait for it every day. I just don't have that patience. All right, language of charts. These are, I promise you that this is going to be the best of the concepts. And here's these top 3 are the best of the things. And it was hard to pick some. The language of charts, I'm going to talk about the biggest money-making mistake and the biggest waste of time. Now, what I try and do here, what's my goal here today? I'd like you all to walk away with something from me that you can at least put in your hat and think about, and maybe it sparks a change in you. Nothing makes me happier than a couple months down the road, I have somebody that emails me and said, I heard you talk, I started looking at your site, blah, blah, blah. I just love what you have to say. There's a lot of people that agree with the way I talk. You may not like my style. You may not like what I have to say. I'm pretty upfront, ruthlessly honest, and some people don't like that about some stuff. But what I'm trying to give to you today are the things that I think can maybe help you the most. Now, I hope you understand, I'm not here to teach you everything I know about charts. It takes about 25 hours, and it's not my goal today, but I will show you some stuff that I think you will hopefully like. And then there's a little bonus thing I'm giving you. It's a new topic I've never mentioned to anybody before, and it's called C plus doesn't cut it, and I'll get to it when we get to it. So, the language of charts. It means knowing how to read any chart. Think of the parallel to reading a book. Knowing the words is not good enough. When you go to understand technical analysis from, just the average source you're going to get it from, they teach you the words. This is support, this is resistance, this is a trend, yada, yada, yada. But you don't get it all thrown together for you. In other words, knowing words, you can know all the words you want. You're not going to write an effective book. You can't put sentences together. You have to really understand, and that's what to me the language of charts is understanding the total interaction of time frames, the total interaction of bars and failed bullish, failed weakness, all these different things that give us incredible, not just clues, but a chart is a direct way to monitor the battle that's always going on between buyers and sellers across multiple time frames. You have access to various pictures of stocks, which is known as multiple time frame analysis. If I had to pick one key thing to understand, it would be this, and most don't even understand what it is. I know you're going to say, yeah, I know multiple time frames. You look at daily charts, you look at hourly charts, you look at 5 minutes, you make sure that everything's pointing the same direction. No, that's not actually what it is. Things are rarely pointing the same direction. You don't need it, and as a matter of fact, that's one of the least important things. You need to understand what you want to see from the time frame directly above you, from the time frame 2 above you, and from the time frame 1 below you. That's all you care about. And when you get a full understanding of that is very, very important. To me, it's probably the most important thing. You can play a trend and lose your butt all the time if you play it at the wrong time in the wrong spot and manage it wrong. Just knowing to play a trend is not good enough. Knowing what a trend is not good enough. You have to go beyond that to really make money. It's understanding that perfect patterns are a nice goal, but it doesn't help you trade or invest. I think I talk about this a little bit more later, and it's one of those little peeves of mine, I guess, that one of those sayings people say is, well, just always wait for perfect patterns. Well, perfect patterns is a bit of misnomer, because what is a perfect pattern to you? What is a perfect pattern to me? Could different traders disagree about what a perfect pattern is? What do you have? What if you have 99.9% of a perfect pattern? Do you take the trade or not? What do you have 99%? In other words, this is what I think matters, and I hope this, if this statement relates to you, I hope it does, because this is really what it's about. This is coming from somebody who's in the trenches every day doing this. Trading is not about finding perfect patterns as much as it is about making money from the patterns that we typically encounter trading every day or every month. Again, whether you're a day trader or a longer term trader. That's what it's about. It's understanding how things work. I want to show you this real quick. This is a trade from yesterday, and forgive me that it's kind of a little sloppily thrown in here. I have a screen that I capture things real quickly that I use to do follow-up teaching with my seminar students. We get together every couple of weeks and do what I call a practical application review day. And I just threw it in here, but it just came up yesterday. It was such a great example. This was a long from yesterday, and this was not on my watch list. Now, as a day trader, I come to the market every day having looked at about 1,500 stocks, and I boil it down to maybe a couple dozen things that I'm looking at that day, and that's usually all I'm looking at throughout the day. But some of the traders in the trading room will often suggest something, and half the time, I'm just not really, that in tune with what they're suggesting. The other half, I get what they're looking at, but most of the time, it's just not good enough for me to take it. Every once in a while, somebody throws something out there, and I go, hey, boom, bingo. And what was interesting about this one is that when you look at these charts, this is sloppy. I mean, when you look at this at a glance, you're like, okay, I get what's going on, but okay, it's really not all that great. But when you look at it again with the right eyes, this is something that about 10 seconds after this person suggested it, I said, yeah, I like it. And 3 minutes later, I was in the trade. And I want to just run down the concepts on here for you that are important. And again, just hitting the highlights. This is a daily chart on the top right, and then we go to a 15-minute on the top left and a 5-minute on the bottom left and a 1-minute chart, which is really just kind of doing the entry. I'm not a scalper as a day trader, but I do refine my entries very much. I think entries are everything. Entries are critical. Entries determine a lot, including keeping you out of a trade, as well as really determining how you're able to manage a trade. But this daily chart, and this was at the end of the day when these charts were taken, so this bar was not that big, but the daily chart was coming off of a major support area that was formed on minor support. That's very important. Major support, believe it or not, even though it's what everybody thinks of as being the greatest thing in the world, major support is actually, in a sense, self-fulfilling prophecy to some extent. There's evidence of a buyer, but it's self-fulfilling prophecy is going to hold. Minor support is guaranteed buyers to some extent. So I always want to see something forming on minor support if I'm starting to trade that way. So the daily chart got a check mark, ka-ching. It's coming off of a trusted, nice support area, which is not always the case. Now, it maybe wouldn't have mattered, but at the time I was looking at this trade, this is a 15-minute chart, and this trade I took about 10:15. So this already had this big green bar in the 15-minute chart that blew through a lot of resistance. So I'm coming off support and I blow through key resistance areas. Boom. What does that mean to me? Next pullback is viable. I get a nice controlled pullback. Great. But you know what? This can fail. So we get a 5-minute pullback. Great. But you know what? This can still fail, right? You guys have had this. You're saying, oh, gee, the 5-minute buy setup, oh, it didn't work. Well, it didn't work because you got to pull all this stuff together. You go from getting 55% odds to 60 to 70 to 80, and pretty soon you're saying, hey, this is really a good trade. So I do what's called a secondary sign of strength. It's okay, the buy setup triggers, who cares? Buy setups are meaningless. And then I find a secondary sign of strength, meaning I'm really pretty sure now it's going to go higher. And then you can see this thing went higher, ended up selling it at 52.83 at a little before 3 o'clock. So it's basically a rest of the day hold. And this is what I like to do, is get a great little entry on something. And I kind of like to hold it for half a day or a day. I don't sit there and micromanage it. I don't sit there and overplay it. I like to kind of find the high or low for the day and then let it play out if I can. And if I get it wrong some days, I kind of lie low. Get it right some days, try and take another trade. And this ended up making more than a day's goal just on the one trade. And this is one of the others were all shorts yesterday, and I made more than that in the shorts yesterday. So I just want to throw that out there because I thought it was just a great last minute, hey, here's something from yesterday, a great display of what I'm talking about by the language of charts. If I showed this to you, the average person wouldn't say it was a perfect pattern, but to me, it is, because it showed me that the bulls here were winning this battle and we're going to win in a big way that day. So again, I thought it was a great example for that. I'm going to move on to number 2 so I can get through all this, the biggest money mistake. Now, again, this is not going to be all charts, but in my experience in helping people, I've seen so many people that get to know the charts and still don't make it. Getting to know the charts is a job. It's not hard, it's not impossible. But even when you get there, my saying is that good chart readers are a dime a dozen. And maybe, I would guess, maybe many of you listening to me are in that category, where you say, yeah, Paul, you know what, I find trades, and at the end of the day, at the end of the month, I think they're higher, they are higher. I think they're lower, they are lower. But you know what, I didn't make any money. I got in too late, I got out too early. Is that a problem for some of you? Because that is hurdle number 2, is once you get the charts right, it's getting the money in the bank. And one of the problems here is this, is the biggest money mistakes. It's a very simple 2-step problem that people have. And step number 1 is they start off when they're new with too big of a risk amount. You may think it's not a big deal. It is a big deal. When you have too much money on the line, you are no longer looking at and studying the chart. You are in fear. And you're worrying about how to protect that money. You're worrying about how to protect those profits. And you're not really focusing on the trade at all anymore. You need to start off on paper, to be honest with you, and then very, very, very small risk amounts. And only move up when you prove your way. That's problem number 1. Everybody starts off way too big. And you think, well, I'm a smart guy. I'm not going to mess around with $5 or $10. I'm going to risk $100, $200. Well, what happens when you risk $100 or $200? You don't know what you're doing, everybody. What happens? Risk $100 or $200, and that's all you risk. What happens is that you find yourself at the end of the week, the end of the month, you're down a couple $1,000s. And then what do? You know what everybody does? They decide to risk more to get the money back. And this is how you start a downward spiral that blows out accounts. And you never, ever, right, Jose, exactly, revenge and increase the risk, right? You haven't got a trade right for the last 10 trades, but now you're going to double the risk amount and try and get it back on the next 10 trades. And this is where people get into big money. And then you know what? The learning process stops. You shut down, right? You just shut down. And you no longer learn. And now you're just on this revenge trading spree and you have a lot of trouble. But there's a second half to the problem too. There's a second half to the problem. Is that I had, a long time ago with the other company, I used to privately mentor people. I privately mentored 99 people. I don't know why it was 99. I stopped one short of 100. But I had this guy before we met. He sent me his trading records and he told me that he had a 61% batting average and a 1.6 or 7 Sharp ratio. Now, I don't know if you're into statistics or not, but that's really good. I mean, that's like almost making money hand over fist. But then he told me he was break even. And I'm thinking, well, all right, you're just doing your numbers wrong, because there's no possible way you can be break even with those numbers. Those are really good numbers, right? So when we meet, what I find out is that he's break even because he's risking $20 or $50 a trade. And he was counting his break even after commissions. And literally, I just showed him, if you would have just simply taken and multiplied your share size by, let's say, 10 and risked $500, you'd be making your living. You'd be making a killing. And it's something he just didn't get. And what people do is that they get to a certain level and they're still afraid, but maybe they have a good track record and they're making some money now and they're risking $100 a trade. And they decide that they're going to be smart now and they're going to be conservative all of a sudden. And if they want to make $500 a day, what they're going to do is they're going to have 5 good trades every day. And that's how they try to make their money. Completely wrong. Completely wrong. You're not going to get, 5 risk units a day, we call it. I think most of you are familiar with that terminology. If you're risking $100 on a trade, a 5-hour day would mean making $500 or 5 good trades with no losing trades. You're not going to do that. Nobody's going to do that. You have to find your comfort zone in what you're going to make in an hour and then adjust your risk amount. Now, this is when you're good. I'm not saying in the beginning. But once you have the track record, you're consistent, you know your strategies, you know your batting average, you know when you're making money, then you up the risk amount to whatever you can handle in your account and what you can handle mentally so that you're making your goal with the trades that you're taking. You can't just up your goal. People get conservative at the wrong time, right? They want safety nets all the time. Well, you know what? You have a safety net already. Your safety net is your stop loss. Your safety net is your stop loss for the day or the month. Your safety net is the amount you're risking per trade. You don't have to double and triple that up and then start saying, well, I'm going to risk less and less and less and try and get more and more trades right. It's not going to happen for you. There is actually a video on the site that talks about this as well. One of the good things when I talk right now is I have so much other information that's out there that you can access it. So if you go back to that, to the free stuff page, there's a video called From Chart Reader to Trader Investor. And it talks about this in more detail, but I think it was an important enough topic that I put it on here as one of the top things to understand. Yes, start off on paper, prove you can make money paper trading, and then once you make money on paper, go up to risking $5 or $10. And it doesn't have to be long as a day trader. Just how about getting 4 trades right, or how about making $20 net for the week, net, not gross, net, and then move up. And if this happened, you would learn the charts better, and you would never have a problem. So when they need more money, they decide to take more trades, but that only waters down the chance for success. See, when you trade properly, you do everything you can to get the odds in your favor. And that happens for a period of time. Whether you're long-term trading, there's a time where the chart is set up right. There's a time when maybe your market timing is right if you're using market timing. As a day trader, there's a time where everything's right. And everything after that, you have lower odds. And you need to strike when the time is right. And anything after that, you start watering things down. And to force yourself to take additional trades when the odds are less than optimal, you're only watering down your results. There's a saying out there as a day trader, an hour a day keeps the job away. See the video From Chart Reader to Trader Investor in the prior events section. Everyone is worried about limiting losses. Everyone is worried about limiting losses. But you must set your risk amount at the appropriate amount and manage properly. All I hear people talk about a lot when they're trading is when they're in a trade is when can I get the stop up? When can I adjust the stop? When can I limit my loss? This is one of the most important things I can tell you. You simply should set your risk amount to the appropriate amount and then manage properly. Even as a new person, you should not be teaching yourself to limit losses. Do you realize, listen to me, that's not your job to limit your loss. There are people I argue with about this, and I just don't get it. I mean, being an experienced trader, this is so backwards to me. You have a risk amount. You've studied the charts all morning or all week to find the trade you want. You find the trade, you enter the trade, and then you're going to tell me 5 minutes later you think this trade is so terrible, you have to worry about how to limit the amount of money you're going to lose. Look, if that's where you are, you shouldn't be risking any money at the moment. Your job, if you want to limit losses, you know what you're going to end up with at the end of the week? You're going to end up with a whole bunch of small losses. And that's what a lot of people do. That's what their focus is. That's what their mindset is. How can I keep my losses small? Don't worry about keeping your losses small. Worry about using the money that you're investing in a trade to make winners out of it and to get bigger winners. That's how you make money. Otherwise, you die the death of 1,000 paper cuts. Anybody know what it means to die the death of 1,000 paper cuts? You must flip the mindset from minimizing losses to maximizing winners. Yeah. Thanks for admitting it. Yeah. I mean, it's hard to admit, but that's what happens to you. And you know what? It's the way most people are trained, to be honest with you. You're trained, listen to this, most people are trained to lose slowly. It's sad. Yanka will tell you that too if she's listening. You're trained to lose slowly. That's what you're trained to do. You got to blow beyond that. There's a lot of things that you have to learn to get beyond that. Next thing, biggest wastes of time. I have to ask you, are you ready for this? Are you sure? Can you repeat the name of the video you suggested? Yeah, it is. It's right here on the screen. Well, actually, you know what, Luis? If you go to the free stuff page, there's a whole page of them there. Listen to them all. But there are. This one's called From Chart Reader to Trader Investor. That's the one that talks about managing the money properly from beginning to end. Okay. But there's several I've referenced there. Go through and see what you want to listen to. There's a lot of good stuff there. All right, are you ready for this list? The biggest waste of time. Now, this is one of these, to be honest with you, like in a prior company, I couldn't talk about this. Why? Well, because the bulk of the population wants to look at this stuff, and we don't want to turn them away. Well, you know what? I don't give a crap about that. I want people to learn how to do this. And you know what? Looking at these next things are a waste of time, and most of you are going to drop your coffee when you see these. But this is not even my opinion. This is just absolute fact, period. Now, let me preface this with one thing. There are 1 in 10,000 people that are unique, that are different. I used to know, indirectly knew, a forensic accountant. He could go on the internet and actually spot inconsistencies that no other accountant could even identify. He was unique. Okay? If you watch the show Billions, okay, they're unique. They have a lot of money. They do cool stuff. But if you are like me and like 99.99% of the rest of the people, and your idea of getting information is going on that super unique thing called the internet that only you have on your computer, then all of this stuff is a waste of time. Number one, looking at fundamentals. I don't care, day trading, and yes, long term. Fundamentals are a complete waste of time. And by the way, as I go through these, I'm not going to have time to make the argument and justify every one of these. But believe me, if you want to have an argument with me about any one of these, I will win. I will win, and you will walk away crippled and humbled, wondering why you ever talked to me. But I do have, that's the calendar, and if you look, I forgot the date, but coming up toward the end of the month, or the beginning of next month, I start the seminar cycle, and the first seminar is a half-day class that everyone's invited to. You just have to be a member. And I talk about this in detail, why looking at fundamentals is a joke, even long term. I don't have time to go through the whole thing today. Just either believe me or come to that class. It's free. There's no catch. Earnings reports, complete waste of time. I don't care what they say. I don't care what they are. I care about the reaction to earnings reports. I care about how the world thinks about an earnings report, but I could care less what it says. I've never read one. Don't care about it. Trying to understand the economy. The economy does not lead the stock market. If you think it does, to disprove that would take about 4 seconds. Just look at the economy compared to the market. They do not. The market leads the economy. You are taught that the economy leads the market because if shows like CNBC, all the Sunday shows, if they are to exist, they have to be teaching you something. And they're teaching you that, boy, we better understand what the book-to-bill ratio is, and we better understand what our exports are doing, because if we don't understand that, we're not going to make money in the market. It's all garbage. None of it helps you. And you know what? Some of you, I know how a lot of you are thinking right now. There's a lot of you right now that are saying to yourself, you know what? I've always thought this, but it just didn't feel right to say it. And it just didn't seem right because I have to justify what I'm doing, right? I have to somehow, there has to be one way to make money in the market, and I have to be smarter than everybody else. No, you don't need to be smarter than everybody else. You need to follow what the people with the money are doing. That's what you need to do. Can you refute is driving? Yeah, thank you. Again, you know what, Lou? I talk about that on the Saturday class. I talk about that on the Saturday class, on the Friday class. That's the half-day class. But it's very simple. One of the things I say there is this, that the people against technical analysis say that what you're doing is you're trying to take the past and project it in the future. It's kind of like in politics today. People can say anything, and if you say it with the right tone of voice, people go, yeah, what is that? What are you talking about? But think about this statement. You're trying to take the past and project it in the future. Yeah, that's exactly what we're doing. You know why? Because that's how everything works in the world, and it works very well. Yes, it's called a trend. And yes, the past is a guide to the future. And that is what we do in charts, yes. There are 2 ways you make money in the market, Lou. There's 2 times you have an edge. And that's through following a trend and through shock value. QCOM is an example of shock value. If you think your goal in trading is to capture QCOM before it ran the other day, you will never make money in the market. It's just right now, just sign out and go to Vegas or go do whatever you want to do. You'll never make money if you think that's how you make money. We're not here to predict miraculous things that happen, to predict incredible earnings reports or to predict court orders or court winnings that come up or to predict FDA announcements. That's not what we're here to do. Not unless you have inside information about the FDA or whatever other thing, which is probably illegal anyhow. We're here to see how things react to those events. That's how you make money. QCOM's to nothing. There's nothing you do about it. Who cares? Go to the next stock. There's 2,000 stocks you can look at. You don't need to be dwelling on why QCOM ran up $30 the other day. Yeah, it won a suit. If it lost a suit, it would have gone the other way. Who cares? A company wins a approval from an FDA. It gaps up $22. The next day somebody gets sick. It gaps down $32. That's not how you make money, Lou. Okay? That's not how you make money. If you happen to be in QCOM, congrats, you got a bonus. If you happen to be short QCOM, you got a problem. Or you're stopped out. Listening to news. News is completely worthless. If you want some more information on this news, besides talking about it at that Friday event, here is an article that I took. I don't like spending a lot of time on some of this. I took a lot of time to write that article. You will enjoy it. It's a good understanding from a common sense point of view why news is worthless, and actually uses direct, recent examples in the market why people are taught to believe that news is worth something, but it really is completely worthless. I often debate saying this, but I do. I have, at least since I've had my own company, because a lot of people take this the wrong way. But to better understand how to make money in the market, whether you're trading, day trading, or long-term investing, trading, whatever you want to call it, it's best handled. Day trading, long-term investing is best handled if you think of it as anybody want to fill in the blank before it comes up on the screen? Think of it as any guess out there? You're not going to like it probably, but I have to tell you, it's the way to make money. Tune out your mind to all the noise. As a business, yeah, Jose, that's good. Business, yes. But otherwise, there's a couple. You guys are from DTS, that doesn't count. It's a video game. Yes, it's a video game. But it's a business too. You're right. I mean, you do have to think of it as a business, not. And I don't mean video game in the sense that it's entertainment, not at all. What I mean by a video game is that you are focused on what's on the screen in front of you. If a kid gets killed in a video game, you know what he does? He hits the reset button. And two things happen. Number one, he's back in the game 100% focused and didn't care about what just happened to him, number one. And number two, he learns from what just happened. It's something adults don't do when they're trading. You know, I have kids that are pretty grown up now. I remember when they got video games. I was a bad parent. You know, they had the shoot 'em up World of Warfare games, and they were too young to have them, but they turned out just fine. They would take that game, they'd stick it in the computer. They would immediately start playing it. You know, I'd go crazy because I'm like, you got to read the directions, you got to read this. They didn't care. They just stuck it in the game. Bam, bam, bam. They're all playing, and boom, they die. You know what happens? They get back in the game. They don't die the same way. They get a little further in the game, then they die. They learn what to do. They get back. And you know what? That's what you have to do as a trader. And that's why, who was it that's talking about HFTs? If you get in a video game and you turn the first corner, a guy comes out from behind a tree and shoots you, and you die. And you get back in the game, you go behind the tree and he shoots you and you die. And you do that over and over and over again. You don't deserve to make money. You have to learn from what's going on the screen in front of you. Not because you think, oh, gee, that was good news they just announced. Oh, not because, oh, they just upgraded the stock. Not because whatever, but because here's what's really happening. There's one truth in the market, and that is the price action in front of you. That's the only truth that there is. Everyone else is out to make their own buck. How often do you day trade? I do about 4 trades a day. And I occasionally will have a losing week. I'll occasionally have a great week. Generally speaking, I don't think there's anything wrong with having a losing week occasionally. If you have a bad day and you don't recover from it sometimes, it depends what's available out there. You know, I push the button hard when I have the opportunities out there. I try to do about 4 trades a day. Sometimes I've had some days I only do 2. Some days I do 6. I get the job done in the morning, though. Most of the time I do my trades in the morning. Occasionally I'll come back and do a trade at lunch, but generally we focus on the first 90 minutes of the day. And that's pretty much it. Bonus. I told you I'd give you a little bonus section. C plus does not count it. Does not count. Does not cut it. I can't even read my own slides. C plus does not cut it. Quick little story. Back in a prior life, before I got involved in the market, a long, long time ago, I was with a company, And it was a company that was subject to having inspections by another company. Doesn't really matter. It's not the focus of it. But if you've ever been in a job where you had an inspection from a place that really mattered, like the welfare of your company revolved around this inspection. You follow me? And I was not the boss. I had a boss. I was like the second boss. And it was quite an experience for me. It was the first time I had this big type of inspection. And we did well. And we're sitting there getting our grades. And they said, you know what? You did this right. You did all this right. You did this right. You did everything according to our standards. What grade did we get? What grade did we get? We did everything according to the standards we're supposed to do according to this company. Right, we got a C. And my boss was furious. He was, I'm talking about almost throwing fists. He was furious because these grades mattered a lot. That's an A. And the guy explained to us very carefully, look, a C means you did what you're supposed to do. A C is average. It means you did everything we asked you to do. A B means you go above and beyond. And A means you are the gold standard. You're the leader. You're what everyone strives to be. Unfortunately, most people come to the market, learning technical analysis, and they learn it at a C level. You can't do that. You're not going to make money at a C level. I have a pure commitment to taking anyone who wants to learn this and teaching them how to do it. But you have to be willing to learn. The odds are very high. You will only learn enough to be dangerous. Perhaps you understand what I mean. Meaning, if you just the way you typically learn, I don't have that phrase real well. If you just typically learn technical analysis, if you go online, you listen to videos, you listen to a quick class, if you don't get the follow-up, see, what I think you need to do is you need to go through and again, I don't want to get into selling this because I want you to get to know me, but when I do a seminar program, there's 3 main classes I teach on 3 consecutive Saturdays, and I not only allow you to, I require you to retake them as much as you want. I teach them every 6 weeks, and it's absolutely mandatory you take them at least 3 times because you need to take the class, go trade, practice, come and see me, then take the class again. And the first time you take a class, you're only going to learn about 15% of the material. That's just a fact. It's guaranteed. The second time you take a class, you're going to get up to 50%. The third time, you're going to get 60, 70, 80, 90%, right? If you run through a weekend and learn the basics, that's the beginning, but that's not the end. Again, if you read my site, the homepage down at the bottom where it says warning, it talks about the fact that, yeah, you can take the first class, and if you're perfect, if you're wonderful, if you're lucky, you'll probably make money if you're only longer-term trading. But you know what? To really get this, to really get every odd in your favor, to get all the odds in your favor, it's the next class that really gets into the real detail and structure you need, stuff that you've not heard anywhere. It's not the basic stuff. It's stuff that only I've taught. I often hear those who get, yeah, blah, 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 blah. Goes in sales. Don, I've been doing this. I sit here and trade all day, and I love showing people what to do. You ought to just get to know me a little bit because I'm not here running a business. I don't care what people do. I do what I do. If you want to learn, great. And besides, that saying is the biggest bunch of garbage. It's one of those things that people say. Do you think Top Gun flight instructors are people that came off a desk? It's just that's what people say who are selling software and stuff like that. So one of the topics today was going to be, it just missed for me, one of the biggest topics to me is called the Holy Grail. People who are after the Holy Grail. And that is people who don't want to learn. Now, if you don't want to learn, that's fine. Then get in a trading room and follow along or subscribe to a letter or don't do it at all. But don't try and take a shortcut there is no software that's going to make money for you by following software blindly. It doesn't exist. It's just a fact. I don't need to argue or discuss it. It doesn't exist. If it did, you know what? Please show it to me. I'll use it. I'm not an idiot. I would love to have anything that helps my trading, makes me more money. Anything would be great. If you show me something, I'm open-minded. But you know what? It doesn't exist. The way you understand the market is to understand the battle that's going on. The language of charts is how you do it. There is no other shortcut. I've been around looking at this forever, and if there was something else, I would do it. But people are drawn to it because people want the quick fix. They want here's the red line, green button, red button, make money, don't make money. None of it works. It's a good question, Jose. And as long as Anka's let me talk, let me go on. When I started, Jose, I read a lot of stuff, and I think I became a compilation of everything that I read, that I studied, that I understood, plus a blending of my own mindset and how I thought about things. Does that make sense, Jose? And I think that's what any successful trader is and becomes. I'm not a blueprint of anyone else. Everybody has their own beliefs. Like, for example, if I took a survey of you and I asked you, do you like to buy breakouts or pullbacks? You'd be half and half. Do you like to play 1 minute charts or 15-minute charts as day trade? You'd be half and half. All these different questions. We all have our unique style, and we can all be right and have our unique style. And you will, through selective processing, you will absorb the things you want to absorb that fit your personality, and you will ignore the rest. And you all become our unique people. I am a blend of people that taught me the things that I've learned. And to a large extent, Jose, I just blossomed on my own. I created tons of stuff because I realized some stuff just doesn't work on its own. Because, but here's the difference where I give myself some credit. I was taught stuff and I did it. And you know what I said to myself? I said, you know what? I feel a little bit like one of those people at a seminar where like the guy goes, okay, everybody run to the back and sign up for this, and 50 people run back and they're fighting over each other to get out their credit card. I feel a little bit like, okay, this isn't quite right. Like when I'm taught, it just is a little, but I also understood that there was real value to it. But you have to expand on it. You have to get better than just what you're initially taught. And what you have to do is, like I said, is that when you see something doesn't work, you have to think, okay, is this worthless or can it be improved upon? And there's a lot of stuff that I just created on my own. And one of my realizations to me, Jose, was I still remember this a long time ago. It was my first year trading. I took a trade on Adobe, and I was buying it on some support area, and I thought it was going to run that day. And I got in it, I set a stop, and I left for a while. I did that years ago. I still do it today. I like to walk away from trades, once the stop's in place and let them play out. And when I came back, I saw Adobe went beyond my target, and this would have been like a whole week's pay for me. And I was thrilled, and then I looked, I didn't have it. I was stopped out. It had dipped down, stopped me out. And I looked at that chart, and I said to myself, you know what? I thought Adobe was going to go from point A to point B, and it did it. And you know what? I lost money. I said, that is never going to happen to me again. Now, it does happen to you, don't get me wrong. But what I was taught was not right. I was taught about stop losses. And you know what? Everything you're taught about stop losses is probably wrong. You need to have stop losses, don't get me wrong. But I will bet you that most of you, your stop losses lose more money for you than they make. Again, don't get me wrong. I'm not saying you trade without stops. You absolutely have to have stops. But there's a way to understand stops that they can make you money rather than lose you money. True or false? Do some of you agree with me that right now, if you went back and looked, that you would agree your stop losses lose you money on a typical day? Now, again, don't get me wrong. There is a day where you say, thank God I had that stop. But if you ignore that one day on a typical day, you probably lose more money from stops than you make. Well, why do you do that? Right? Why do you do that? Well, that's part of what I try to show people. To me, it's a big thing. Managing stops, managing targets, managing the position, managing the entry, managing... Anka, right? I love you, Anka. You go back with me when I started too. But there was a time that was forbidden to say, right? I started saying that. A couple years ago, and then I started seeing emails. I get emails from places, just whatever. I don't even know what the place is. And soon after I started saying it, finally somebody had this title, your stops may be costing you money. But it was forbidden to say, right? Because when you come to the trader world, there's one thing that everybody agrees upon, right? When you're brand new, everybody, what's the first thing that you're taught? What are you taught day one? That if you do not do this, you will lose as a trader and you will go to trader hell from which you will never be expelled. That if you don't follow your stops, you will be out of money on day one. And you know what? It's true. Initially, people lose because they don't follow a stop and they get killed, right? But you know what becomes more important? Is that after you learn to follow your stops, how about getting to a target? So 2 years later, that person doesn't have any big losses. They have quote-unquote normal losses, but they have little tiny profits that barely add up to the one loss they have. And you're in the same position, right? Whether you take a $1,000 loss and you have five $200 wins, or whether you take a $200 loss and have five $50 wins, you're in the same spot at the end of the week. So you have to get beyond that. It's more than just manipulating the numbers. See, here's my examples of C plus doesn't cut it. Follow the trend. Good rule. As a matter of fact, I'd be the first one to say that when you come to trading, you learn a handful of rules, and 90% of them are garbage. They're crap. One of them lives on. Follow the trend is a good rule. But If that is all you know, you will get killed. What do I mean by that? Well, the trend on what time frame? What about the other time frames? Do you know what the sweet spot of a time frame is? The rookie says follow the trend. The pro says that's a start, but find the exact right place to enter. He or she may also know better when the trend may end. There's little room for error. Another one, buy on support, sell resistance. Okay, that's a good process in general. But if that's all you know, you're going to get killed, right? Some of you agree with this? If that's all you know, you're going to get killed. What is support? What is resistance? I teach 4 concepts to rate support areas because some things that people call support are not support at all. Look to the left is not support or resistance. There's some stuff to the left that means nothing sometimes. Sometimes it means a lot. You need to understand the difference. Key support areas should be played after they break and they refuse to drop. Not when they hold above where they're supposed to hold, but when they hold and they break. When they break, they're often the best long. Think about how the market works. How most are trained in a theoretical framework but will lose money. Understand that people sometimes say, oh, the game is rigged and oh, the market maker took my stop. Well, I've trained 2 market makers. One of them I still talk with quite a bit. Market makers aren't there to take your stops. They can't take your stop in most cases. I mean, you're trading a well-traded stock. They can't run the stock down 20 cents to take your 200 shares. They could care less. But what they do understand is that when a whole boatload of traders all acknowledge one spot as a stop and it's coming into that area, they have no problem letting it go through that area and then start to buy it, right? And that's what you have to acknowledge and see when that happens. So again, the rookie says, oh man, this support area didn't hold. I lost again. The market maker took my stop. This whole game is rigged. The experienced person says, okay, let's watch the stop get run and then let's see if we can find an entry with the market maker. Do you see the difference? And those are the little nuances that people don't get taught when they just say, oh, here's support, here's resistance. There's little room for error. I have some whoa, shoot. I hit the N key by mistake. Sorry. Close your eyes, close your eyes, close your eyes. There we are. Okay. 60-minute chart over the last several days. Right? 60-minute chart. Boom. Can anybody tell me, anybody see a trend there? Anybody see a trend? Answers. Anybody see a trend? Perfect trend, perfect hourly trend. And I hate using trend lines because they're not really that meaningful, but what a beautiful trend. This is the market over the last week or 2. Beautiful hourly trend. Does that mean that as a day trader that you are long all the time? Well, you should follow the hourly trend on the stock you're playing. If you're playing the market, you're best off to always be looking long. But if you're going to take a trade on some mornings, for example, I'm going to dive into a couple of these mornings on the 11th, on the 12th, and on the 17th. Here's the 5-minute chart. This is on the 11th. Market's going to open here. We're gapping above a lot of resistance. Should we be long this day because the trend is up? Well, you'll get killed. On the 12th, same thing. Trend is up all the way across the board. We're going to open way up here. The trend is up. Should we be long? Well, you'll get killed. It takes more than just blindly saying the trend is up, be long. Now, I agree with following parent time frames, a whole lot of things. But an extreme example would be like if you're a day trader, you're not going to be long every minute of every day because the weekly chart is pointing up on the stock you're trading, right? There's a limit to what you have to do. And a lot of times some of your best trades are playing what may be considered a sideways pattern or a smaller time frame downtrend. It depends how things set up a lot. Another one, the 17th, just a few days ago. Gapped above a big base in an uptrend. Got to go long, right? Oop, you get killed. Any of these days, you never would have come back. Because the hourly chart, even though it's in an uptrend, these moments you picked on were at resistance type areas, right? Now, just for an example, on the 17th, what was I doing that day? Well, here's the room that day. I had one long because it was a very unique play. I explained to the room, this is a unique stock. Boom. Short, 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 short. Up until 11 o'clock, my last trade. Short, 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 short. Right? What's that question you mentioned earlier? You break me then, man. Because great question, Luis. I think I have your question. Let me answer, and then let me read your question because I'm not sure that I have it. We talked about trading futures before. And again, love trading futures, good thing if you want to do it. Here's something that I am against, though, Luis, is being forced to trade Forex or futures because you don't have the money to trade stocks. In other words, if you want to trade stocks, if that's where your heart is, if that's what you like doing, and you're new, and you're forcing yourself to either A, swing trade because you don't have the 25,000, or forcing yourself to trade futures or forex, which I think is harder to learn in a sense. There's great advantages to it, absolutely positively, but you don't have that variety thing. So if you want to do that, that's great. Some people like doing forex because they work another job and they can trade forex at 4 in the morning. That's great. Some people like futures besides the leverage, which is great. Of course, there's the other advantages, and you can trade them around the clock and all kinds of good stuff. But if you're doing it because you're forced to do it, it's kind of a bad thing. And the typical thing is that if you don't have the money to day trade and that's what you want to do, people try to swing trade, they lose the money. They try and do futures, they lose the money. What I suggest you do is learn what you're doing, and there are a couple options. You can get into prop trading if you do want to do equities, where you can take that money and have it leveraged up. I do have on the site a place that I started working with. I'm not involved with them personally, but it's a place where you can have the advantages of a lot. I don't want to get into it now, but you can read about it and email me about it. Okay, here's something you can't avoid at some point, Louise, is the fact that if you want to trade, you have to have some money. And the answer is you're not going to like probably is that you need to learn what you're doing, period. You need to learn what you're doing and come up with more money however you can, or look at the prop trading aspect of it. But however you do it, when I talk about getting into bigger risk amounts, you have to earn your way into bigger risk amounts. The last thing I want to get across, I'll make this really clear when I did those slides about the money mistake people make. It's starting off too big and then ending up not big enough. You have to start off really small and then you have to earn your way higher. But there's a truth you can't get around, and that is if you have little money to start, you are just in a practice type environment where you're trying to learn until you can come across more money or find out about prop trading. Okay. So guys, at the very least, all I would ask you to do, again, I don't want to encourage you to do anything other than get to know me a little bit, take your time. Do become a member though. There's nothing in it for me other than you're on my email list and I have a chance to prove to you that if you want to learn what you're doing, whether it's just getting a subscription to something or whether it's learning what to do, I think most people will like what they see with me. You may not. We may have different personalities, different styles, and in that case you won't. But being a free member is nothing. There's no credit card. I don't do sales and stuff. You're not getting salesy emails. I look forward to talking to you guys in the future. You'll get invited to my events. I'll be doing an event next week, and you will get invited to that as well. All right, guys. Thanks a lot.